Hello and welcome. This is Gordon De Silva, and today we're going to be talking about IR35. Who it's for? It's going to be for businesses who either employ limited companies or subcontractors to do their work, and it's for subcontractors who work through limited companies who typically work for one or two major companies and earn their income through contracts, either through agencies or direct with the end user. So we'll talk more about that. You probably have heard of IR35. If you haven't, then you're probably a company that hires them and it hasn't been in your radar, but it really needs to be in your radar. The Inland Revenue have gone quiet for a while because of the election, but have not really ramped up their advisory thing. Now, if you were cynical, and I am a little, then you would probably say, well, the reason they're not doing as much as they can is because they want to collect some penalties and increase their tax take. But that's only if you were cynical. Anyway, let's get started and see where we go on this. So the agenda today is we're going to be looking at what could go wrong. We're going to look at the current situation and changes that are happening right now, some of them as late as this week. We're going to talk a little bit about how it's going to work, and of course we'll finish on how we may be able to help, if at all. It may not be relevant to you, but I suspect for many of you it will be very relevant, especially for contractors, those consultants who work for one major company and so on. So my contact details are on the bottom of most of these slides, so just you can take a note whenever you feel the need to, or visit our website whenever you feel you want some information. So let's just introduce Gordon's Knight and myself. Gordon's Knight is a multi-award firm of chartered accountants. We've won awards of 4 or 5 years on the trot. We've stopped entering them now because we have probably better things to do at the time. We just wanted to prove a point that our method of working was so good. We've been in business for over 30 years and have seen so many changes. One of the things that sets us apart is our communication skills and our willingness to go the extra mile for our clients, communicate clearly with them. We avoid sitting on the fence. We want to get in there and be part of the client's team, part of your team. I am Gordon De Silva. As I said, I run the firm of Gordon's Knight. I am passionate about client service. I'm passionate about keeping more of the income you earn. I'm passionate about making sure that we work less hard for more pay and enjoy more of the fruits of our labor. So that's what I'm about, and you'll see evidence of that as we talk through this if you haven't already. So on IR35, what could go wrong? Let's have a look at that. The first and biggest thing that could go wrong is you could end up with a massive tax bill. In the past, it used to be if you were a contractor, you could end up with a massive tax bill. Now, if you're a hiring company or even an agency, you can end up with a massive tax bill. If you don't really understand it, then you have this uncertainty. Will you be caught? Are you inside? Are you outside? Are you at risk? Will you get the tax bill? Will you get a letter from the Inland Revenue? Typically, they send them in these brown envelopes, and typically they arrive on a Saturday morning, just when you're relaxing, and it sort of spoils your weekend because you may not have any source of advice on that day. So the revenues has demonstrated a willingness to create stress to achieve their ends, and their end is to collect more tax, as stated. Of course, the stress this may cause because of the uncertainty, and when you get these letters, you can't avoid factoring that into the whole problem. And of course, financial difficulty. Either you're going to get less money because of this legislation, or you're going to be put in financial difficulty if you get caught by it. So if you don't plan this right, things could go badly wrong for you. And so it's important that you, although your accountant should understand it, and many do, and many more don't, it's important that you take your responsibility and understand it. as accountants, we understand it in depth, which I'll demonstrate through this discussion today. However, it is so important that you take the responsibility, if you're not with us, that you really understand and can spot liars, cheats, and those uneducated who haven't spent the time we have on educating ourselves to be the best we can be for you. So the first thing is let's talk about IR35. It's private sector and it's called off-payroll, right? That you may see it as off-payroll, but often you're going to hear it as IR35. New rules are being drawn up that will apply from the 6th of April 2020. That's this year, a couple of weeks away now. And in the past, it was only the contractor who was at risk. Now those people paying the contractor, whether it's agencies or the end clients or both, end up at risk. And so what you will probably find is some big businesses taking less risk and just putting people under PAYE or putting them into IR35. What happens is, so the risk is whoever pays a PSC. Now, PSC is a personal service company. It's a company that offers the service of one person. So, for example, Gordon's Knight is a limited company, but it's not a personal service company because you don't buy my personal services. You buy the services of Gordon's Knight. The high level stuff is done by me, and much of the routine work is done by my team very, very, very competently using systems I've set up. So clearly, I'm not a personal service company. And so personal service companies are those companies where the individual who owns the company typically delivers all the service or the lion's share of the service, and it is dealt with on a contract by contract basis. What's happening is this income is now looking to be taxed under PAYE. The government hates PSCs because their tax take from PSC is reduced. Less so now because, surprisingly, a conservative government has introduced dividend tax, which makes the taxes on dividends comparable to sort of the national insurance on salaries. But there's still a tax loss because there's no employer's NI, which is what this piece of legislation is looking to fix. However, when you get taxed under PAYE, under this legislation, through an agency, you don't have any employment rights. You're still a contractor and you're responsible for your own employment rights, although you're paying all the taxes that you would normally pay as an employee. So you have all the downside with no upside. So that's one of the things to really consider. So when's it effective from? As I said, 6th of April 2020. And this is something that's changed just this week. It's a misunderstanding if you haven't got this, and it demonstrates, if you're getting advice from anyone else who's not telling you this, it's because they're not keeping up to date with what's moving in this fast moving section. And it's for work commencing from the 6th of April, not for payments only from. So of course, if you do work commencing from 6th of April and you get paid after that, it'll catch it. But if you do work before the 6th of April and you get paid after the 6th of April, it's not going to be caught by this legislation. Hopefully that makes a little bit of sense. And it's the right thing to do. It's the fair thing, I think. It's not that the Inland Revenue is often fair, but in this particular case, they came under pressure to change it. They were looking at charging tax on this basis on all payments after the 6th of April, regardless of when the work was done, which is a bit naughty. Anyway, that was stopped. So we're moving from end user decides to the supply chain complies, and we're moving to the supply chain decides and the end user complies. So it's a complete turnaround. And one of the things that we need to notice now is that we need a status determination statement on every contract. If you don't get one, then somebody in the chain doesn't know what they're doing and you become liable. So just be really careful of that. If you don't receive a status determination statement, either the people who are hiring you don't know what they're doing, or the people above them in the chain don't know what they're doing. And if you're not still hearing about this, then people above in the chain are putting you at risk. Okay, so just be aware of that. They're putting themselves at risk, greater risk, but they're also putting you at risk. So just be aware. So now on the SDS, the hirer must show the rationale of their IR35 decision. They must show they've taken reasonable care. Now, this is a bit of a high bar. How do you show you've taken reasonable care if you don't really know what's going on, if you don't know the legislation? So you've got to be showing, you know what's going on and you're taking reasonable care. You've got to identify the employment status for tax, whether you're in or out of IR35, and you've got to give detailed reasons for your decision. And this information, this SDS, must be passed to the agency and the PSC, which is why I said if you're not receiving one of these or you're not creating one, you don't really know what risk you're taking. So let's move on. Who is caught by this legislation and who does it apply to? It really applies to PSCs who work for, well, all PSCs for a start, right? But it also applies and it affects large and medium-sized companies. So let's look at what a large and medium-sized company is. We've already decided what a PSC is, personal service company. A large and medium-sized company includes the group worldwide. So all of these numbers I'm going to give you now, the next three criteria. If you fit two of them, you are caught. If you fit only one, you may not be caught. Okay. So, but you must bring in the group worldwide. So if you're a subsidiary of a group that's in America or in Dubai or or in Australia, then you are caught if you fit two or more of these. So the first criteria is the sales are over 10 million. Your balance sheet of gross assets, that's excluding your liabilities, is over 5.1 million, and you have more than 51 employees. If you have less than those, then you are not a large or medium-sized business. Okay, so just keep that in mind. So let's look at the flow of information. The flow of information goes from the end user, the client, to agency or agencies, to the personal service company, through to the worker. That's how the money flows, and that's how the document should flow, the SDS. Okay. So what is the effect of IR35? Now, one of the clear effects that the Inland Revenue intends is for people to be taxed more, so they will get lower tax pay. It will mean the tax take for UK PLC, the HMRC, will be higher, which may mean they'll be able to fund HS2 or something equally expensive. But I want to just bring in one thing. There is a risk here of renegotiating your contract with the current the current hirer, the hiring company, the current client. Let me explain. Just say your increase in tax loss is going to be the employer's national insurance. Call it 12.5% for argument's sake. Okay. Now you could go to your agency or your end client and say, look, I need to be put back in funds for this. I need to increase my income, my rate by this 12.5%, or you may want to compensate for tax and make it 15% or something in that region. Now, if you do that, what you're doing is basically saying, well, you're now saying I'm caught by IR35. Up to now, I've said I'm not caught by IR35, but we've adjusted my rate by exactly the right number to put me back in funds by the right amount, which probably means that maybe I was in IR35 already, and that is a high risk strategy, isn't it? Because you now have given the Inland Revenue evidence that you are now under the same contract deemed to be caught. So why wouldn't you be caught before? Take that as you see it. But to me, that is a really high risk. And if it was me, I would change contracts and go to another company as a break of contract, because you don't want this type of charge being levied at you. You want a nice clean break from this. Okay, so just bear that in mind. I really do encourage you to take this very seriously. So let's look at some of the tests. Just if you're a personal service company, I just want to cover briefly. You've probably seen this before, but if you're a personal service company, then you're offering personal service. You're offering your own personal services. Your own skill, your own knowledge bank, and you're not offering that off all your team because you haven't got one, right? So that's one of the definitions of a personal service company. The second one is who controls you, right? Do you control yourself, and or do they control you like an employee? Can they tell you what to do each day, or do you have to determine what to do based on your knowledge and skill, and they leave you to it because that's why they hired you, right? So if you're doing the work yourself and they're telling you what to do at each step of the way, that looks more like a job, and you're probably going to be caught by IR35, aren't you? But if you're controlling yourself, then again, you're blurring the definition, right? So they may say to you, we want you to work on this project, but that's not the same as telling you, I want you to code this bit. You're having to decide which bit to code and how to code it, and because you've got the skills. But if you're working as a team under supervisor and they're telling you what bits to code, then you may see that they've got control over you. What about neutrality of obligations or mutuality of obligations? How about if you have to take on work? If they give you work, you've got to take it, and and you have no choice in whether to take it or not. That's an employment type situation. On the other hand, if they offer you work and you decide you don't want to do it, that is not neutrality. It's not mutuality. In which case, chances are you're going to be outside IR35. So you can see it's a bit of a mix and match, right? But if one of these is very strong, then you could lose out because it is such an overwhelming case for IR35 to apply to you. And of course, are you a standalone business? Are you a proper business? So we'll talk about all of these four now just briefly. The personal service company, are you a proper business and not just paying lip service and pretending to be a business? Just because you set up a limited company doesn't really mean you're a proper business, right? It just means you've got a limited company. And are you free and open to do what you want when you want to do it? Do you have the ability and willingness to take on contracts and do what you need to do? And are they willing to give you the headspace to go in and use your skill? And who is responsible for you, right? Are you responsible for doing the work yourself, or are they responsible to make sure that they give you work and have to tell you what to do? So all of these things determine whether you're giving a personal service or not. Control. Let's look at control. For control, you've got to look at how you're controlled, what are they controlling, when are they controlling, and where. How do they give you work? What work do they give you? When do they give you the work? And do they tell you when to do it? And do they tell you where to do it from? All of these things are elements of control. So you've got to be aware of how you fare. You may want to give yourself a mark against each of those, a percentage, and just see how it looks, because that's ultimately what the Inland Revenue are going to do. Now, there is this thing that says, well, as long as I put in my contracts, it's okay, then I don't need to look at this. But unfortunately, the contracts are secondary to what happens in practice. Okay, the days when the contracts determined how well or badly you fell into IR35 are gone. It's now the working practices that make a difference. Then you've got mutuality of obligations. So, do you have an obligation to do the work they give you, or can you say, I don't want to do the work? Do you work only on contract terms? Can you be terminated immediately? If you're an employee, you couldn't be terminated. You're going to be given 30 days notice or something. So if you've got a notice period in your contract, that's putting you closer to being an employee than a contractor. If, for example, clients of Gordon's Knight can tell me they can fire me or tell me they're leaving at any point in time. They don't need to give me 30 days notice or anything like that. And that's a proper, proper business. And you've got to have multiple end clients, maybe, right? If you only have one client, you are suggesting that you're reliant on that company as a job. So what about the risk? If you are you in business, do you take proper risk? Do you take the risk of not being paid? Do you take the risk of taking longer than it should, and you lose, and you're getting a lower rate than you should? If you have to put things right if things go wrong? Let's look at equipment. Do you have to provide your own equipment? Sometimes you just may not be able to. If you work for a bank, they're going to want to use their computers and not your computer because they don't want you taking their sensitive information away. So, but do you provide your own equipment? Are you properly separate from the business? Do you go to their Christmas parties? Do you use their canteen? Do you use their car parking facilities? All of these things would suggest that you may be an employee because employees get those benefits. I had one client who used the gym at the location. Now, obviously, if they had to use the gym as an outsider, one, they wouldn't be allowed to, but they'd have to pay for it possibly. But you've got to keep yourself separate. And do you look and feel like a business? Gordon's Knight has a website, it has email addresses, it has telephone numbers, it has answering services, it has it has the whole range of business requirements, and so it does look and feel like a business, which is why it's clearly not a personal service company. I'm just giving that as an example. So give yourself that test as well. So let's look at just renegotiating the rate. Now, we've talked about the rate drop because your effective rate after tax may well drop as a result of this. But I did touch on, and I want to just now reiterate on screen that they could backdate this IR35 liability if you give them the evidence that under the same contract for the same client under the same terms, you're now in IR35, whether your rate has changed or not, and previously you were arguing that you're outside, you do want to worry about that, okay? So even if you weren't renegotiating your rate, you may want to change contract. That's how seriously I think that you should take this. So keep that in mind. One of the things that sometimes levied against accountants is we always look at the downside. And look, you can look at the upside all you like, but if you don't pay attention to the downside, you could get eaten up. And so while I'm happy to look at the upside, you've got to take account of this downside, please. I'm a very positive minded person, a very positive thinker, but I'm also a realist. And my job is to keep you on the straight and narrow to make sure you don't suddenly get something that could jeopardize your family's income, your retirement, your name, your reputation, all of those things. Okay. So let's look at a couple of options here. You could go to an umbrella company. You could go through an agency or and under PAYE, or you could go under the fee payer arrangement. Okay. So let's look at some of these. Let's look at an umbrella. With an umbrella company, 100% goes through PAYE. You're employed with employee rights. They have clear terms, and you'll get holiday pay and all the other statutory benefits. Okay, so a good umbrella company will do that, and so beware of others who don't. Okay, we'll offer great news because they go, we've got some great tax plans. We'll talk about that at the end. So the next one is the fee payer I want to look at. And this is where your personal service company or personal service company invoices you plus VAT. You've got to pay the VAT. You've then got to take the net amount before VAT and apply PAYE to it. The fee payer, so this is the client or the agency, has to find the employer's NIC, and the personal service company receives the net pay plus the VAT. So you can see how that works. And what you also begin to notice is that the net pay, it then goes into your accounts, your bank account as net pay, and then the VAT goes into your VAT return as normal. The net pay goes into your payslip, and there will be a box apparently under the RTI payroll service where you put in the amount you've received under IR35. Okay, so some of you were concerned, do you put this money directly into your personal account? When the answer is no, you put it into your company account, and the company account then segregates it into a separate location in your account. You won't pay tax on it again because it's already been taxed, and it goes on your PAYE notification every month to the Inland Revenue. Hopefully that makes that clear. It is quite technical, that bit, and your accountant or us, will look after that for you, and we'll work through that each month for you. So let's look at the options that may come your way. I've given you the options. We've got the umbrella company and the fee payer and so on, or PAYE under the agency. Let's look at some other options that may be offered to you. And we unfortunately would not countenance much of this. And some of them look like really attractive options. When you're looking at reducing your net pay, there are people out there who will exploit this emotional feeling you have of wanting to keep your net pay the same, your own personal income the same. And so they will use their intellect to look at offering options that say, we can give you a much higher rate than you would under PAYE using our schemes. Now, there have been a whole load of schemes which have been closed down by the revenue. They are very, very, very high risk because the Inland Revenue's track record for closing them and making life incredibly difficult for taxpayers who use these schemes is legendary now, right? I mean, I have heard blood-curdling stories of how the Inland Revenue have gone after taxpayers. They have got psychologists, and listen to this. They've hired psychologists to draft their letters. If you've had threatening letters from Inland Revenue in the last year or two, you'll have noticed a massive change in tone over the last, from 10 years ago. The tone now is so much more personal and threatening that many people are tempted to pay even when they don't believe they owe the money. I'm not talking about necessarily just in this, but in other areas, PAYE and personal tax. It is quite scary. So, but the risk is very high, and the amount of money you could lose is significant. Six figures, not hard to contemplate. Okay, so there is some really bad stuff that can happen, but you've got to bear in mind the Inland Revenue's attitude is completely different to what it was 10 years ago. Now they have got no one holding them back. There is virtually no voice in Parliament that will give the taxpayer a better hearing than they will the Inland Revenue. If the Inland Revenue says these people are avoiding tax, the Parliament will almost certainly agree with them and side with them rather than looking at it dispassionately. That's how powerful HMRC now are, and how seriously you must look at this, because HMRC have demonstrated that they will collect tax at any cost, right? They don't care how bad and how threatening they are as long as they collect their taxes. And so you want to be really careful. And also, there is this lovely piece of legislation they introduced, which is fair enough, I suppose, called the Criminal Finances Act. And so anyone who recommends a tax strategy that reduces tax, which is subsequently found to be illegal, and bear in mind, the Inland Revenue changes their, excuse me, let me just go to a low battery thing. The Inland Revenue changes their application of the law retrospectively now. It never happened before, right? Now they'll go, well, the way we're interpreting this law is not like it is written down in law. It's like how we want it to be. And by the way, we're applying this to 10 years ago, 15 years ago. And anyone who did this stuff 10, 15 years ago is now being caught. And so you begin to understand how dangerous this is. And anyone who advises or recommends these schemes gets also caught. So clearly, on the basis that there's so much risk, the Inland Revenue is so aggressive, the Inland Revenue have got no holes barred, no one is on the side of the taxpayer, there is so much uncertainty, nervousness, cost attached to this stuff. There's so much stress, and then there's this thing of the Criminal Finances Act. Why would anyone in their right mind challenge them? Right? It's like David and Goliath. Is it David and Goliath? You know, it's completely outweighed, and yes, you may have a slingshot, but honestly, would you really put your finance, your family, your future at risk on the hope that you have, a slingshot that could bring back the giant, right? Possibly not. I certainly wouldn't, but everyone has their own risk profile. So I just want to make sure, I just caution you about this. And so, where can you get more information on this? HMRC is a place to get information. It's a good place. Their site is much better than it's ever been, but clearly it's detailed in the way they want you to apply it. So it isn't necessarily detailed in the way the law is framed, but they want their job is to collect the most tax. Just remember that. If your job is to collect the most tax, what information are you going to put out there? You're going to put information out there that's going to collect the most tax. Okay, clear as day. The second place you could find information is from the web. Now you've probably found this on the web. I've given you my credentials. I've given you my heartfelt feelings on how dangerous some of the other weird stuff that goes on around this might be, and what your roots. You've got to judge yourself whether you believe I know what I'm talking about or I don't. But I was just reviewing a couple of sites when I was preparing for this, and I was amazed. Out of 5 sites I looked at, 3 of them had wrong information. Okay, now how would you tell whether the information was right or wrong? Is the problem, right? So you've got to judge who to trust properly. Look at their credentials. Look at what they stand to gain out of it, and just buyer beware, right? And this time, watcher beware, reader beware, internet surfer beware, whatever it is. Okay, so just be careful. So let's look briefly at how we can help. We can give you advice. You've heard how I give advice, how clear it is, and how in depth it is, and how much it covers on any topic. But generally, I love business. I'm really good at business marketing and tax. And so, advice on business, on making your business work is what I love. And of course, on tax, it's part and parcel of what we do. But, business first, tax second, both equally important. I can help you do calculations on how much tax you might pay and stuff. There is obviously a fee attached to that. I may or may not be tempted to go down an umbrella route and become a recognized umbrella, only because there are some real rogues out there, and we have a history of doing really well by our clients. So if there's enough interest, I may offer an umbrella service. And we of course do bookkeeping and accounting for businesses. Where businesses are too busy to do their own books, we of course handle all of that really effectively, really efficiently. We of course do the accounting, and we of course minimize their tax bill legally. And so that is a little bit about how we can help. If there's anything more I can tell you, anything more you'd like to know, please get in touch. Our phone number 0208-241-3000. Just ask for somebody to give you a call back on a topic of your choice. Look at our website, book a 10-minute call on our website, or look at some of the other blogs and just get a sense of what we're about and whether we are right for you. All right. So that is it for this presentation. I hope you got something or lots out of it, but at least something out of it. And if you'd like to give us some feedback, I'd love to know what your feedback is and what you'd like to know more about or less about. And if there's any other way we can help you, just either contact us directly or leave a message down below. We'll always read and we'll always reply. Take care. All the best. Goodbye.